makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Here's what's coming up on today's programme. Stocks get a boost from big tech after Microsoft and Alphabet impress. The focus shifts to PCE data out today as traders pair those rate cut bets. The yen is the weakest in 34 years, closing in on 157 per US dollar. The BOJ holds rates steady, with Governor Ueda giving no hints to another hike. Plus, offer rejected. Anglo American says a $39 billion takeover bid from rival BHP significantly undervalues the company. We dig in to the details. Let's check in on markets then. The European markets map giving us an indication that European stocks could end up with their first weekly gain in 4. It's the old school part of the sectors that's kicking in. The miners, particularly here in the UK on the FTSE 100, alongside the input coming through from technology, with a handoff, of course, from Asia, but more importantly, the Microsoft and Alphabet stories that we will be decoding for you throughout this hour. Let's flip the board cross-asset then, as we see largely green on the screen across the European stocks picture. We continue to focus, of course, on the Japanese yen. 156 right now. Losses, I should say, of about 0.1%. It's fluctuating right now. 155.65. We monitor this. We are on, of course, intervention watch. Governor Ueda not pushing back on the softness that we've seen in the currency. Of course, any intervention would come through from the Ministry of Finance, and they may or may not announce that if and when it comes. PCE, of course, the inflation data out of the US, crucial for us on a number of fronts, but of course it ties into the Japan story. 498 right now on the US 2-year. The GDP print, of course, softer than expected, but the price gauge coming through in the data yesterday picking up, causing some to suggest that maybe we're edging towards stagflation in the US. A big question mark over that, though, of course. Copper broke through 10,000. It's 9,991. Really interesting, of course, given the potential tie-up, or at least the attempted tie-up between BHP and Anglo. The price of copper currently up 1.3%, and that is tying into the mining space. Let's flip the board and have a look pre-market then of the big tech names and the beats that came through. Very, very solid sales coming through from Alphabet, and you can see pre-market a jump there of close to 12%. Their AI investments are paying off, particularly within the cloud business, and really interestingly, of course, coming through with their first ever dividend. The other stocks that we're looking at, of course, include the story around Microsoft, also coming through with a beat, and also the cloud story there. Consequential gains of 4% pre-market for Microsoft. Intel, a very different story there, continuing to struggle as they continue to play catch-up. They've invested heavily, of course, in building out the foundry business in the US. Investors seemingly need more convincing that that turnaround program is going to pay off for Intel. That stock looking to losses of close to 8%. And briefly, Snap coming in with a beat as well, the advertising part of the business coming through for Snap. Let's briefly look as well at the currency space, with the focus, of course, on the Japanese yen at a 34-year low versus the US dollar, but also at lows versus, of course, the euro, the Aussie dollar as well. 155.55 right now on the Japanese yen. So it has paired some of the earlier losses. We've been hearing, of course, from Governor Ueda. He did not push back on the softness we've seen in the currency. He didn't give an indication as to when the next hike may come through from the BOJ. Most traders still expecting another hike, at least one more later this year from that central bank. Let's get to the tech story then. Strong AI demand has been cited as a key driver for positive earnings, of course, from Microsoft and Alphabet. Here's what Alphabet CFO Ruth Porat had to say about the company's results.
We are very pleased with our financial results for the first quarter, driven in particular by strength in search and cloud, as well as the ongoing efforts to durably re-engineer our cost base.
OK, at this point, we bring in, of course, Bloomberg's Alex Webb for the deep dive on what we've been seeing from both of these companies, what it tells us as well about the investments around AI. What kind of stood out to you, Alex, from both Microsoft and Alphabet?
It really looks like AI is now providing sort of a meaningful tailwind. It's not the main thing driving their businesses, but it is starting to make a difference. I think about 7 percentage points of Microsoft's cloud growth came from AI. Google, which has long been the laggard in the cloud behind Microsoft and Amazon, it is now posting pretty chunky profits in that cloud business. The market was expecting $600 million or so of profit. It posted $900 million of profit from Google Cloud. That is a lot of it to do with the fact that Google is one of the really two big players in the AI space, and it is benefiting from that.
Darktrace not nearly the same size and scale of Microsoft and Alphabet. But really interesting in terms of the read across the broader story around this. Of course, UK listed, there's an offer to take it over. In fact, they've agreed to us. Give us the details. And I think for me as well, at least you can push back on this, but for me it seems like it's another example of one of the crown jewels, we have a few of them, around tech in the UK being snapped up by a foreign buyer, this time from the US.
Yeah, I mean, look, with Darktrace, when they went public, there was a bit of a conversation. Well, should they go public in the UK or should they go public in the US? And, of course, their investor was Mike Lynch, who has been continues to face a certain amount of legal difficulty in the US. Some wonder whether that, therefore, informed the decision to list in the UK. So if you are a private equity firm, you can see a pretty clear path, perhaps, to generating return on this. You take it private for a few years. It also has very little leverage. It's a net cash position at the moment. So you could add a bit of leverage and then take it public in the US in a few years' time, where you benefit from the higher multiples of which certainly most tech stocks in the US are likely to trade.
OK, Alex Wade, thank you very much. On the Darktrace story, and of course that stock getting a big lift on the back of that news, agreeing to sell themselves to Thoma Bravo then, and of course the details around the Microsoft and Alphabet stories. Alex Webb with the details. Let's bring in at this point Maya Bhandari, the global head of multi-asset at BNP Paribas Asset Management, and Bloomberg's Justina Lee. Thank you very much, both of you, for joining us on set this Friday. Maya, I'm going to start with you in the question of tech. Really fascinating in terms of the dividend and the buyback coming back from Alphabet. I don't know if you can talk about individual stocks, but nonetheless, to me, there's an interesting story coming, which is that these are now cash-generating businesses, income-generating businesses, as well as that growth component. Are we looking at a new theme around stock investing? What does it tell us about the way these changes have come through?
I think you're absolutely right. I think that it is really interesting that we are starting to see some dividends from these companies. And I think for me really underscores, if you will, the importance of the cash flow picture for these companies. I mean, if you think very broad brush, but returns on assets are really a function of two things. Your discount rate that you apply to your cash flows. And cash flows are comprised of earnings and dividends. So it's interesting to see that mix shifting a little bit more towards dividends. But I'd say broadly, for us in 2024, that cash flow picture is really very important. I think the outlook on discount rates, and we can talk about that a little bit later on if you like, but I think there's been quite a lot of uncertainty around where discount rates go, where policy moves in the US, but also, of course, in Japan this morning. And so that cash flow picture is very important. I think for us at BNP Paribas Asset Management, areas where we see good cash flows and areas where we want to invest are indeed US tech, Japan, European banks and parts of EM Asia. I think those are the areas where we're seeing a good cash flow.
You've been adjusting some of your exposure, and we want to unpack that with you, certainly. Let's bring in Justina Lee at this point. Justina, is there a sustainability to the uplift that AI and tech is giving to these equity markets at this point?
Yeah, it's interesting because I feel like Alphabet and Microsoft, I mean, their earnings was really sort of the epitome, the best version of the Magnificent Seven story, which is that they're essentially kind of riding these structural trends and to an extent where they're almost not as vulnerable to the ups and downs of the business cycle. But I think you're kind of seeing from the market reaction to earnings this week, for instance, the reaction to Meta's earnings, that in a way, because the market has already rallied so much going into this earnings season, that the bar for a positive surprise, for a positive market reaction is actually quite high. And so I think, the positive reaction we're seeing to these two tech giants' earnings is a sign that, I mean, kind of despite those high expectations, they still managed to beat that.
Maybe we need to reformat, finally, the Magnificent Seven category, given some of the idiosyncrasies around some of these names. Justina, thank you. I'll come back to you with more questions on the macro at some point. But Maya, in terms of the expectation from some that the earnings story, and if we had, Justina was nodding to this, 70% or so of S&P companies have come through with a beat, but the stock reaction, the market reaction has been a bit more mixed. Can the earnings story propel these markets higher amid a concern about higher for longer on rates?
Well, I mean, I think you're absolutely right. I mean, not only have beats been rewarded, but I guess what's interesting is misses have been punished quite badly, and particularly in Europe. So I think to us that sort of emphasises, if you will, the importance of those earnings coming through. As I said before, I think areas where we'd be looking for good earnings and earnings perhaps above the street, European banks, for example, right? I mean, we've got, is it 3%, 3.5% earnings expected this year? We think there's considerable upside prospectively to that. that is we have a structural shift moving out of negative interest rates with good balance sheets and pretty attractive valuations to boot. Similarly, with Japan. I mean, Japan has stood out to us really for the last 6-7 months as being one of the few areas where earnings at an index level have continued to rise, almost bucking the trend of other areas where earnings have been a bit softer. And important to say, it's been much more to our minds than just the yen.
OK, the yen has been a factor, but it's more to the Japan equity story than just softer yen. Justine, in terms of the market reaction, the repricing around the Fed, and the data yesterday out of the US was softer GDP, but prices continuing to pick up. 1.6% on GDP. The estimates have been for 2.5%. And then within that mix, the CPE, or the PCE number, I should say, picking up. And we have the official core PCE later today. Where are we in adjusting to that new narrative? Does the soft landing scenario that many had been betting on at the start of this year need to be sidelined?
Yeah, and I think, if you kind of dig beneath the surface, I think the results were maybe not as extreme as one might think. For instance, like GDP was sort of like influenced by the lower federal government spending, and kind of the PCE was influenced by a lot of like non-market prices categories. But I think big picture, I mean, you can tell from how markets are repricing those rate cuts, right? I mean, they're just pricing them out, pushing them back and back. And I think so big picture, the story is still that inflation has been way hotter than expected. And so, and at the same time, economic growth has been way stronger than expected. But I guess, it does kind of point to maybe a troubling trend that might have implications for the election coming up as well. I mean, if you do see kind of growth starting to slow, but inflation maybe not cooling as quickly.
Stagflation is not a headline that Biden is going to want to see, and it doesn't look like he's going to benefit, at least at this point, according to the market pricing, from a rate cut, because that looks like it's not going to come through till December. That are the bets, of course, the election in November. Justine Lee, thank you very much indeed from our markets team, of course, breaking down what we've been seeing broadly across these equity markets, and of course the call there and the lines in terms of how we're repricing around the Federal Reserve. Maya Bhandari from BNP Paribas Asset Management is going to stay with us, and we'll get more of her calls in terms of how to position in these markets cross-asset as well. Coming up, more volatility in the yen, of course, after the BOJ holds rates steady. We continue to monitor for possible intervention. That is next. This is Bloomberg. Welcome back. So the Bank of Japan holding, of course, on interest rates. A dovish pause is the way that Bloomberg Economics have characterised it, and we did not get any sense from Governor Ueda in his press conference that he was going to push back on the weakness in the Japanese currency. 156.33 right now. It's been a little bit jumpy just in the last couple of minutes or so. A bit of volatility coming through from this Japanese currency. Of course, we continue to be on intervention watch. The call from Bloomberg is that 157.60 is the crucial line to watch when it comes to this Japanese currency. And of course, the inflation data out of the US later today could also be consequential in terms of where this currency goes from here. As I mentioned, the press conference, the BOJ's Governor Ueda giving no hint of further tightening. There have been expectations from some that they might start, for example, QT. That didn't happen. For more on this, let's bring in Bloomberg's Rachel Evans, still with us. Very pleased to say is Maya Bhandari from BNP Paribas Asset Management, who has some views on Japanese equities and the currency space as well. Rachel, let's start with you. The moves that we've seen just in the last few minutes on Japanese yen, on the back of the Ueda press conference, where do things stand right now in terms of our expectations around this currency?
Yeah, I mean, I think it tells you just how nervous everybody is, kind of in the wake of the press conference. We didn't see, as you were pointing out, as much pushback as you might anticipate, given how much weakness we've seen in the yen. And I think that speaks to where the Bank of Japan views its role in the currency. It is a Ministry of Finance policy tool, not something that the Bank of Japan necessarily weighs in on. But that really means that we're kind of in this sort of no man's land, wondering as and when the Ministry of Finance is going to intervene. There's a lot of speculation that could come today. We do have key inflation data out in the US. Around 1:30 UK time, 8:30 in the US. That will give us a really good sense of how the Federal Reserve is going to come at its own interest rate policy. And if the Fed isn't able to cut because inflation stays too strong, that's a problem for Japan, as it means that yield divergence is not going to get any closer.
Does it pull forward BOJ hikes in that scenario?
Yeah, so I think it's an interesting question, because that was a lot of the topic of conversation earlier this week when we were thinking about the Bank of Japan meeting coming today. Would they be extra hawkish or maybe even pull a surprise hike, just because we have seen that yen weakness being so significant, because the data coming out of the US is really not helping the case of Federal Reserve cuts. Just yesterday, the GDP data had some very sticky price inflation data within it, and that prompted like a big move in treasuries, further curbing of expectations for Fed cuts. So it's not been easy for Japan on that front.
OK, Maya, you're leaning into the Japanese equity story. How contingent is that on weaker yen?
I think clearly a weaker yen plays a role. We've seen the price action just overnight in the topics and the Nikkei. But that is, if you will, a thread that isn't consistent. I think Japanese equities don't have a particularly consistent relationship, if you will, with the yen. But I would say for us with Japan, there are 3 or 4 key supports. The first is earnings, which and the cash flows, just to what we were discussing earlier, remain really strong, and we're confident that continues. Second is a really strong bottom-up story, shareholder reform coming through that we think has legs, structural legs, if you will. Third, very importantly, we like the sector composition. Japan gives you exposure to manufacturing companies with high operational leverage, but it also gives you exposure to sort of tech names at a very different valuation point. So we like the sectoral mix of Japanese equities. And you get all of that to our minds, a really good valuation. So on a forward price to earnings basis, for example, the Topix is at a 15% discount to global equities. If you look at price to book or price to sales, that goes up to 50%. So you get a number of positives to our minds at an attractive valuation point, and I think valuations are something that we're all struggling with, certainly in equities.
Yeah, you're certainly not alone. You and the team not alone on that question. Maya Bhandari, thank you very much indeed. You've got to run off to Bloomberg Radio right now, so we're losing you for the moment, but going over to the team on radio. Maya Bhandari, of course, the global head of multi-asset at BNP Paribas Asset Management. The view there on the Japanese stock story and how the yen ties into that. Our managing editor for FX and Rates, Rachel Evans, staying with us. Coming up, Airbus shares fall after reporting soft results. We bring you that story and the exclusive interview as well. That will be coming up after the break. We're going to get more lines now, though, from Rachel Evans to kind of work through some of the key themes for these markets. We, of course, focus in on the inflation data, PCE, out of the US later today, and we've talked about the relevance of that to the Japan story. Rachel, what is standing out to you above and beyond Japan that is a consequence for these markets as we head potentially to the first weekly gain for European stocks in, 4 weeks?
Yeah, no, I think kind of like the Bank of Japan has really been the backdrop for this week, but everyone is now looking forward to next week. Next week we have the Federal Reserve meeting, and the question is how that is going to reshape the market environment. Treasuries have been having a terrible rout all year. Bond investors came into this year expecting gains, expecting the Fed to cut, and they have been disappointed again and again. And you started seeing that come through in some of the rhetoric from Fed speakers in recent weeks. You've had Jerome Powell talking about, maybe now's not quite the right time. You've had other Fed speakers talking about that inflationary outlook. Stocks have actually been pretty good through all of that. You've seen the inflationary sort of picture adding potentially into expectations for margins in the stock world. So I think, it's going to be very interesting to see how the Fed walks that line between trying to sort of curb inflation sufficiently without curbing growth. And I think that's where yesterday's GDP numbers were really worrying, because you did see growth starting to take a dive.
If you see yields, if you see that hotter PCE print coming through today and a hawkish commentary from Fed Chair Jay Powell at that meeting next week, which some expect, what does that do to the sell-off in the bond market? You were unpacking that for us. Yields are a little down, a little bit lower, 1 to 2 basis points across the curve today. There's an appetite for clipping that yield from investors? There's a tension there. Where do you see yields moving? Is there a line that you're focused on?
Yeah, well, increasingly, it was 5%, but we've gone through that on the 2-year now, so we're all having to revisit our calculations of how far we could go. And to me, the line in the sand to watch is really the cycle peaks that we had in yields last October. That's when we saw the 10-year going through 5% for, I think it was the first time in 16, 17 years, before it quickly reversed and we saw that nice rally into year-end. That's where I'm watching. We're still a fair ways off that in the 10-year. But I think if we do see the data come in hot today, if we do see Powell basically saying that we may not get a cut this year, going from 150 basis points of cuts at the beginning of this year to 0 by the end of the year, I mean, that's a huge, huge swing. And I think, yields have backed up a long way, but they still could go a lot further.
Rachel Evans, thank you very much indeed. Managing editor for FX and Rates on Bloomberg, of course. Plenty more coming up. This is Bloomberg. Airbus shares in the red this morning after the company reported soft results in the latest quarter. Let's bring in Bloomberg's Benny Camel, who leads our aviation coverage. What's going on, Benny?
Well, Airbus has had a very good run this year. Let's not forget that. The stock had been up quite substantially since the start of the year. And in no small part that has to do with what's going on at Boeing. This week was a bit of a split screen sort of event. We had Boeing earnings on Wednesday. We had Airbus on Thursday, and yes, the Airbus numbers weren't as good as people had expected. They maintained their target for the year, so all in all, there's enough to look forward to. But there's probably a bit of buying on the disappointment of the first quarter, and that's why you're seeing the stock drop.
OK, Benny Camel, thank you very much indeed. The stock down 2.3% as we speak. Coming up, Anglo American rejects BHP's takeover offer. We bring you the details and the context next. This is Bloomberg. Stocks getting a boost from big tech after Microsoft and Alphabet impress. The focus shifting to PCE data out today. As traders pare back those rate cut bets, the yen swings close to 157 per US dollar. The BOJ holds rates steady, with Governor Ueda giving no hints to another hike. Plus, offer rejected. Anglo American says a $39 billion takeover bid from rival BHP significantly undervalues the company. We dig into the details and bring analysis. Good morning to The Pulse. Welcome to The Pulse. I'm Tom McKenzie here in London, standing in, of course, for Francine Lacqua, checking in your markets for you with, of course, a lens and a focus on the Japanese yen. There's been some volatility in the last 20 minutes or so around this currency. Not a big surprise, given that there is intervention watch, of course. Maybe a bit of fat finger trade coming through for the yen. Continues to weaken at down 0.5% versus the US dollar. Over a 5-year period, by the way, over a 5-year period, this currency is down close to 40% versus the US dollar. 156, our team at Bloomberg said that 157.60 is the line to watch for intervention. And, of course, the inflation data out of the US will be consequential for that. 498 currently on the 2-year, back below that 5% level, a move of just 1 basis point. And, of course, we watch across the curve for the reaction to that inflation data in the US. The Fed decision next week and the commentary from Jay Powell, of course, will be consequential. Copper back above 10,000, up 1.6%. And, of course, that ties into this Anglo BHP story, and we'll get the details on that as well. Will this lead to more capex spending within the sector? 10,000 and above for copper currently. To that story then, Anglo American's board has unanimously rejected a $39 billion takeover proposal from industry giant BHP, saying it, quote, significantly undervalues the company. Even before the 107-year-old miner shut down the offer, South Africa's government has signalled its opposition to the proposal. And, of course, they have a lot of the skin in the game when it comes to this story. For more reaction from there, I'm joined by Bloomberg's Jennifer Dabasaja in Johannesburg. Jen, what has Anglo American said?
Yeah, I mean, Tom, not surprisingly, they have, as you mentioned, unanimously rejected the proposal. But the statement is really telling. If we just read part of it, they said the BHP proposal is opportunistic and fails to value Anglo American's prospects while significantly diluting the relative value upside participation of Anglo American shareholders relative to BHP shareholders, calling it unattractive, highly unattractive is what they say. And also noting the fact that it would create a lot of uncertainty, which has been a lot of the discussion around this proposed deal since we first found out about it on Thursday. So now the question is, what does BHP do next? And as you mentioned, a lot of the discussion, too, is about how is South Africa and the South African government and the shareholders here particularly going to respond to what is a very complicated structure with this company.
And Jen, you're there in Joburg. What has the South African response been to this takeover bid?
Well, I think what's important to note is that South Africa State Pension Fund is one of the biggest shareholders in Anglo. And of course, Anglo is very significant to the Johannesburg Stock Exchange. And the BHP proposal, as you may have noted at the top of the show, is hinges on the fact that BHP wants Anglo to spin off the South African assets. Anglo has a storied history in this country, employs thousands of people, and Anglo has already been going through job cuts and restructuring. And so the question is, what happens next? We actually heard from Gwede Mantashe, who we spoke with a few weeks ago about the elections, but he's saying that he is not in favor of BHP's bid for Anglo. He says he's not speaking on behalf of the government, but saying that his experience with BHP in the past has not been positive. And we also heard from the State Pension Fund noting how critical the South African mining is to the economy and really to all the stakeholders and the jobs that it creates in the country. It's also a major export for South Africa. So this is very complicated and will likely face a lot of scrutiny from all players. So we're going to have to pay close attention to really how this evolves.
OK, Jen Zambasaja joining us out of Johannesburg, off Bloomberg, of course, on the South African response to this attempted takeover. Jen, thank you very much indeed. At this point, let's bring in Ben Davis. We stay on this story. Ben Davis, mining analyst at Liberum. Ben, great to have you on the show for your take on this. Was Anglo right to reject this offer?
It was certainly expected by most of us that they would. I mean, the premium that was kind of implied by the offer was only about 13-14% on the close. For a company that's been around for 100 years and were trading above that offer just as recently as last year, it feels like a lowball bid. On top of the fact, on kind of what they've highlighted in their statement, that the structure was very unattractive. I mean, they were asked to spin out Kumba and the Anglo Platinum stakeholdings to their shareholders, which would have created a huge amount of flowback uncertainty. We saw it with Thungela a couple of years ago. That whole register nearly flipped within 10 days. So to try and accommodate that would be incredibly difficult.
What is the BHP rationale for pushing for that restructuring that, as you say, has all those complexities?
Yeah, it feels, I mean, part of it is probably a size issue, so it would be an easier business to absorb. But clearly, it sends the signal that they're not interested in South African assets. They've already made that clear when they spun out their other South African assets with the South 32 vehicle. So I can see why the South African government might be a little sensitive them doing it second time around.
What would be, do you have a view on what an attractive premium or an appropriate or a fair premium would be for this business?
It would have to be, it would be, I mean, for us, we're looking for at least 30% to the close, I think, for that to be considered by the board. But even then, it is challenging. I mean, the reason why Anglo flags this as being so opportunistic is that they have massively underperformed the rest of the sector over the past 18, 24 months or so. So, this is ever since they've had, like all mining companies, have had a bad run of operational mishaps. Some of them their own fault, some of them infrastructure-related in terms of what's actually happening in South Africa. So, for BHP to come in now is always going to seem like a bit of a, timing-wise.
A lot of speculation that it won't just be BHP making a bid for this company. Who would top the list of other potential contenders? How much appetite is there within the mining sector for this business?
So compared to where we were in 2012, where people were just trying to buy anything and everything, it's got a lot calmer. We saw Glencore Tech last year. They've probably got their hands full with that as that goes through the regulators. So it's not a long list of people. Probably Freeport and Rio Tinto are the top two names. But Rio Tinto, in my mind, is probably the one that is most willing to do the deal. They've said themselves, or certainly in recent commentary, that they're builders, not buyers, particularly when it comes to things like lithium. But at the end of the day, Anglo American is one of the very few assets or companies around which is somewhat in play that could be acquired. And if BHP, I don't think their current bid obviously has not been successful, but if they come back with a bit more, they're not going to just let BHP get their hands on it. So I expect their tune will change quite rapidly over the next couple of weeks.
OK, so we watch for that from Rio Tinto. How do you see this? I mean, you touch on it, you nod to it. How do you see this, Ben, unfolding in the weeks and months ahead?
It's not going to get out of control. I don't see, we're not expecting big cash bids or, real kind of where we were back in the super cycle kind of charge days. But at the same time, that those copper assets are very much in, there is a very minority of them. So, yeah, you expect the bid premium to climb from here, for sure.
What would a tie-up between BHP, and it's a big would, there's a big question mark clearly still over this, what would a tie-up between BHP and Anglo mean for the broader copper sector?
Yeah, it's one for, what the regulators would be considering. I mean, it would make BHP the clear biggest copper miner in the world. They're already actually overtaking Codelco because of Codelco's poor performance. But, yeah, they're going to be considerable in size. Now, would this be an issue from a competition perspective, which some people have flagged? I don't think so. From a concentration perspective, they would have no market impact. And the idea that they would try and influence prices by pulling back production is somewhat farcical. But the Chinese might try and stick their oar in, that they did with Glencore and Xstrata with the tie-up there. They don't have real teeth, but obviously they buy most of the world's commodities, so they have some part to play.
Including copper, which is central to this. Back above 10,000 on copper, the highest levels that we've seen for about 2 years. What is the level that's around pricing of copper that gets CapEx back to levels that could start to see real production flows coming through for this metal?
Yeah, you definitely need good prices to get these bigger projects off the ground these days. Glencore has, certainly signalled out saying that they want to see copper sustainably above 10,000 before they start trying to do greenfield copper projects like El Pachón in Argentina, so on and so forth. But at the end of the day, we recently did the CapEx analysis. It's incredibly highly correlated to just whatever happens in the previous year's moves in terms of prices. So absolutely expect copper CapEx to be up 10-15% above consensus estimates.
And briefly on prices, I don't know if you have an outlook for the rest of the year, but does it look stretched at this point? Is there further upside for copper, do you think?
Certainly our in-house view that it's overdone, the move. If you look at a lot of the physical fundamentals, the other kind of short-term indicators like physical premium in China, that's collapsed to zero. There's not appetite for physical metal demand. There's plenty of inventories available. There's not really a concern at this level. It feels like a big speculative push. So when that unwinds, timing that is always difficult. People have very strong and long-held beliefs that copper is going higher for longer, but this one feels a bit premature.
OK, smart and timely analysis from Ben Davis, mining analyst at Liberum. And, of course, before that, Bloomberg's Jen Tabasaja on Anglo American's rejection of BHP's $39 billion takeover bid. And, of course, the view from South Africa. But this story, it seems, has legs. A reminder, Jen will be leading our coverage of South Africa's election next month. Catch that special next Friday on Africa Amplified. Coming up, US Secretary of State Antony Blinken is meeting with President Xi Jinping in Beijing. He got the meeting. That's as the world's biggest economies spar on trade and China's continued support for Russia. A couple of lines coming through from that meeting, as reported by the state-run TV network CCTV. President Xi telling Blinken that there is room for China-US ties to improve. Xi says that China and the US should be partners and not rivals. He does acknowledge, though, according to CCTV, that there are issues between the two countries. Plenty more coming up. This is Bloomberg. Welcome back. Now, US Secretary of State Antony Blinken has been meeting with Chinese President Xi Jinping. A couple of lines crossing from that meeting, again, as reported by the state-run TV network CCTV. President Xi telling Blinken there is room for China-US ties to improve, acknowledging that, of course, there are issues between the two nations. President Xi saying China and the US should be partners and not rivals. Earlier, China's top diplomat, Wang Yi, warned Secretary Blinken that problems are mounting between the two countries, even as relations stabilise.
The China-US relationship is beginning to stabilize. Across the areas, our two sides have increased dialogue, cooperation, and the positive side of the relationship. This is welcomed by our two peoples and the international community. But at the same time, the negative factors in the relationship is still increasing and building. and the relationship is facing all kinds of disruptions.
OK, for more, let's bring in Bloomberg's Jill Desus, who's been following all of this for us from Hong Kong. Jill, a lot of lines crossing the terminal from this meeting. He did get the meeting, US Secretary of State Antony Blinken, so I guess that's something to read into in and of itself. What is the latest?
Yeah, Tom, so as you just said, we're just starting to get some lines from this meeting between Blinken and Xi Jinping. It looks like these may just be some opening remarks, so still, TBD. Does seem like the meeting is still going on, but yes, some thoughts about cooperation. There's still room for improvement in the U.S.-China relationship. Did think it was interesting that Xi kind of opens there saying, that there has been some progress there made in the last couple of months, because as you and I know, Tom, and as our audience knows as well, this has been a very, very contentious relationship during a very contentious political year, particularly for the U.S., which is gearing up for an election later this year. I mean, we've seen, some additional talks of potential sanctions from the U.S. on China, particularly as it relates to maybe some Chinese businesses that the U.S. believes is still working to supply Russia with funds in its war against Ukraine. So I think that there's a lot here that is, very, very tricky. But as of so far, I mean, look, Antony Blinken, he met with Xi when he was in China last year. So I think just the fact that he's able to secure yet another meeting with the Chinese leader does indicate that there's, still that level of progress that's continuing in this relationship right now.
So on that level of progress then, and of course you provide all the caveats around that, in terms of the efforts to stabilise this relationship, how much work has been done? How much progress has there been in terms of putting those guardrails around this relationship, as the US likes to phrase it?
Well, Tom, I think just the fact that you continue to have really high-level, top-level U.S. officials that are traveling to China does indicate that the U.S. cares certainly about managing this relationship. I mean, from the U.S. perspective, we've seen a lot being done under the Biden administration to set up those kinds of guardrails and actually to kind of, take action to curb a lot of China's technological ambitions in particular. I mean, just look at the number of, sanctions or restrictions on, China's access to, external technology that have been applied in recent months over the last year, especially when it comes to those high-level advanced tech, semiconductors, that kinds of things. I mean, there's a lot that's being done from the U.S. side to pressure China. I mean, look, earlier today, and China's responded on this. Earlier today, Blinken sat down for 5.5 hours with Foreign Minister in China, Wang Yi, where the Foreign Minister in China actually brought this up and said that, a lot of these curbs that the U.S. has placed in China to sort of curb its economic development is actually, maybe, unnecessary. I mean, this is a line that we've heard repeatedly out of China. So I think that continues to be a line of tension as well.
5 hours. Yeah, that's a substantial amount of time, isn't it, for the two to meet? And let's see and let's hope that maybe some progress was made on some of these fronts. Jill Desus with the analysis on these meetings. Of course, the US Secretary meeting with Chinese President Xi Jinping in Beijing. To France now. Fitch and Moody's due to upgrade their ratings on France this evening, 1 month after the country revealed a larger deficit than expected for 2023. Bloomberg's Caroline Conat looks at whether this could put an end to the no tax increase mantra of Macron's government and the potential consequences of a downgrade.
Protests in France last year over pension reform were a political blow for President Macron. Still worse, savings from it were not enough to keep the fiscal deficit under control. The gap jumped to 5.5% of GDP, far higher than the official target. With slower growth, meaning lower tax receipts, the finance minister will have to find at least 20 billion euros in spending cuts in the next budget.
So now, what direction should we take? Restore our public finances, go back to a deficit below 3% in 2027. This is the commitment I'm making.
A commitment that's unlikely to be met, according to Moody's. A year ago, Fitch downgraded France 1 notch, citing the high level of public debt, which has jumped from around 65% of GDP 20 years ago to over 110% today.
Should rating agencies decide to downgrade France, of course, that would be something that would not be welcome and that would prompt certainly the government to try to act on it and to design an expenditure reduction plan or maybe a new tax increase, which is really orthogonal to what the government has been saying so far.
The pile of debt risks undermining Macron's economic credibility and could fuel support for the far-right party of Marine Le Pen. Her National Rally movement is leading Macron's party in the polls by more than 10 points as the June European election approaches.
Bloomberg's Caroline Conat reporting from Paris. Coming up, traders bracing for US PCE inflation data out later today. We have a preview next. This is Bloomberg. Welcome back. Now, the yen briefly swung to gains against the dollar after hitting its weakest level in 34 years after the Bank of Japan left interest rates on hold. In a press conference, the BOJ's Governor Ueda gave no hint of further tightening the currency, currently at 156.56. The weakness continues, but it's been a choppy session to say the least. Let's bring in Ven Ram from Bloomberg's MLive team for the analysis on this. Ven, what do you make of what we've been seeing around the currency, what we've heard from Ueda and the Bloomberg economics team suggesting this ultimately was a dovish hold? Wrap it all together for us and explain the market reaction to this, Ven.
Morning, Tom. Definitely, it was a dovish hold from the Bank of Japan. Of course, as you mentioned, the yen briefly spiked higher, but those gains, it has surrendered those gains since, and it's back in losses. Now, the market is in heightened state of jitters, and we'll get the core PCE data out of the US later this afternoon. If the core PCE data show accelerating inflation, then that means that the U.S. Fed is going to prioritize inflation over the softening in the economy that we are seeing, and that will mean higher real rates in the U.S. That in turn will push the USD JPY pair higher from here, and you talk about towards 160 in the coming weeks. Yeah, go on, Tom. Yeah,
so 160. Yeah, so we could be looking at 160. That's really interesting in terms of further weakness. And we know that the team, of course, at Bloomberg have suggested that looking back at commentary from Ministry of Finance officials in Japan, 157.60 could be the line at which they intervene. Ultimately, you think it gets to 160 potentially. And the PCE, of course, as you say, is going to be consequential in that out of the US. Given what we saw on growth yesterday, the price pressures that we saw again picking up yesterday, and then the preview of PCE today, how do you see all of that evolving, Vem, and the rate expectations for the Fed? How consequential is this print going to be today?
It's going to be hugely impactful for the markets because what we saw yesterday was that the economy is softening, but it's still hugging the trend growth that the long-term trend growth in the US. So at this point of the time, the Fed has a dual mandate, one on employment, one on inflation. At this point of the game, they are still going to prioritize inflation because we have seen that those numbers consistently point to stickiness in inflation. So at the moment, they are going to prioritize inflation over unemployment, over economic softness. And that will mean that the markets will rightly price out any chance of a rate cut 24 if we get a very strong print later this afternoon. And that will mean that the USD JPY will push higher. Whether they come in at 157.60 or higher than that will depend on the speed of the move rather than particular levels of the currency. And mind you, the MOF and the BOJ are going to be looking at the yen not just against the dollar, but against a basket of 30 currencies.
OK. Ven Ram with the strategic lens on that PCE data. We leave you a check of US tech. This is Bloomberg.